Suki, just give us first of all the basics. What is your target for gold for the year?
We're expecting gold prices to surpass $2,000 per ounce again this year. And we think we're likely to see most of those gains materialising in the first half of the year. And we believe that the vaccine rollout is likely to see most people receiving the vaccine after H2. So we think the macro environment still remains very supportive for gold, and particularly in H1, where we expect further dollar weakness, and we expect real yields to remain negative and monetary policy to remain accommodative, and of course, further stimulus to provide a cocktail of positive factors for gold.
Yeah, I mean, last year we saw gold above 19,000 for a good period of time, but then we went back under and stayed there for the rest of the year pretty much. At what point in the year do you think that we'll start to see that move up again? Will we need to see a lot more vaccination?
We think that a number of those factors are still very supportive. The positive factor in January is that we're leading up to a key physical buying period with the Lunar New Year taking place in early February. So we've got some physical market support. But if we're looking at investor allocation into gold, it started the year on an incredibly positive note. We had huge inflows across the ETFs, and we had a large increase in tactical positioning as well. And perhaps some of that positioning was premature, but we think we're likely to see a continual allocation into gold, particularly as inflation risks are materialising now as well. So we think over the course of the first quarter is when we're likely to see a retest of that 2,000 point.